Hey, it's Amy Lewis from News Radio KFBK from the Morning News, along with my buddy, Brandon Haefele from Catalyst Mortgage. And we're doing the Catalyst Report, kind of trying to make sure that we all better understand refinancing a loan or what we need to know about when it comes to things like that. Last time we talked about the circumstances that can impact a loan during the process. Today, kind of want to talk specifics this time around, okay? Specifically about what happens when rates drop. And we always talk about, should I lock in that rate? And should we lock in the rates? Is that something that you have to do, and when do you have to do it?
This is a conversation we love to have with clients because really it's specific to the company that you work with. And when I say that, companies each have a policy when it comes to floating down your interest rate after you've locked. Let's say the market gets better. Let's say, when Brexit happened, rates tumbled. Have you already locked in? Can you float down? And it's really a case-by-case scenario with each company.
Okay, hang on. You just said float down, and that's a term that I don't think anybody has heard unless they've refinanced. So what's a float down?
So let's say today you locked in your interest rate, and you locked in a 3.5% on a 30-year fixed, paying some fees. But let's say interest rates dropped 2-3 weeks later. Some companies actually offer a float down from the existing rate that you locked down to the lower interest rate at no additional
I was
cost.
going to say, do you have to pay for it?
Well, in some companies you do. It's really case-by-case scenario with different companies. So really upfront as a consumer, you want to ask those questions. Do you offer a rate down or a rate float down policy? And if so, what does it entail? Is there fees? How many times can I do it if rates drop, and so on?
So does every company offer a float down?
No, they do not. Banks, depending on the bank, they do. But when it comes to independent mortgage lenders, and also most banks too, don't offer it. You really have to investigate and find out upfront who's going to offer that.
But when you think about locking in a rate, and we think it's so important because that's what we've heard all along, is it better to wait for a float down? Is it better to lock in? What should you do as a consumer? What do you need to know?
It goes into case by case, but first investigating upfront, what company you're working with and how they do,
Can
their
you say
process.
up front, hey, if the rate floats down,
Absolutely.
do you guys charge on it?
Absolutely. You can totally say, if rates drop, will I get a lower interest rate? Will you float my rate down? Yes or no, black and white. But make sure you also get something in writing, like an email. Being an educated consumer is going to save you a lot of money. But going back to, the previous statement of banks and how mortgage companies do it, sometimes there's a fee, but if you look at, hey, if I'm going to get, even if there's a fee, if it's a quarter point charged to do a float down, if I'm going to end up saving, $300, $400, $500 in interest a year by getting that lower interest rate, even if you pay a quarter point fee, if that company does charge it, it's totally worth it over the life of the loan. So you really have to gauge company to company, policy to policy, just to see what's going to be best. And one other thing to touch on, people do float their interest rate. They don't lock in right away because maybe there's, fiscal policy that's going to come out that might change rates. And your loan officer up front should be able to tell you what things are going to affect rates. And floating your loan overall is okay. But really, I would say if you have a company that will lock in and give you a float down, that gives you security if rates go up, but also gives you the benefits if rates go down.
Let's take the float down out of the equation. When is the right time to lock in?
My opinion, I always lock up front.
I have an opinion too, but it's probably wrong. So yes, your opinion.
I always love locking rates up front, and I say that for the simple fact that if there's not big policy changes coming down, or we're not going to see some news coming out in a week or two, just to lock it and have it be secure for the client. Because Catalyst, we do float down on rates, so we have a float down policy, and if rates drop during the process, we're going to float you down to make sure you get the best deal. So for us, lock up front to guarantee that for the client, and then if rates drop, we'll just float them down.
Yeah, so once you lock in, don't think, oh great, I'm stuck there forever. You actually have wiggle room.
You absolutely do. And again, it comes into upfront, being an educated consumer and asking the questions, what do you offer and what are your policies with regards to a float down?
And remember the float down.
Remember the float down.
That's the term.
Exactly.
All right, so we learned, right? Remember the float down, and remember that you don't have to hold on to that rate if you've locked it in. You've got wiggle room. All right, so now you have a little bit more knowledge about how to approach your refinance, thanks to Mr. Haefele and Catalyst Mortgage. It's the Mortgage Report too, the Catalyst Report on Monday mornings at KFBK from 7 to 8. So we hope you join us then too and listen up to be a better informed consumer, right? Thanks, Brandon.
Thank you.